Acura NSX prices have stopped falling, but that alone doesn't tell you whether this is a buying opportunity or a warning sign. What matters is why they stopped falling and whether that reason is actually sustainable. Depreciation risk hasn't disappeared. In fact, some signals are getting more complicated. In this video, we'll take a data-driven approach to analyzing the NSX market and figure out if it's a good moment to buy an NSX from a value perspective. We'll look at the latest developments in the price trend, analyze how quickly cars are selling, and compare the NSX to the rest of the supercar market. Now, it's not the first time the Acura NSX features on the channel. 2 years ago, I shared this deep dive into the Acura NSX market with you and concluded that there's no reason, from a value perspective, to avoid buying a base NSX, while the Type S was a risky purchase. Let's see if this still holds. We start with the price trend for the base model of the NC1 generation. This generation and model type has the most reliable data, as supply is relatively high. We can see that prices increased by roughly $23,000 during the pandemic price surge, bringing the new price level up to $153,000. But like the general car market, a correction followed. Between September 22 and July 24, prices dropped by the same $23,000. This brought the price level back to pre-pandemic levels, of course, not accounting for inflation. But that is when things started to change. Prices didn't just flatline, they started to increase slowly. In December 25, the price trend returned a price of $134.7 thousand, up 8.1% from December 24. Of course, this increase falls short of the double-digit growth we've seen in the Ferrari market, but from a value perspective, this looks like the perfect moment to enter the market, right? Well, yes and no. It also matters why they stopped falling and whether that sets the NSX up for strong future prices. If we imagine a situation in which nobody is buying an NSX and sellers aren't decreasing prices, we would also end up with a stable price trend, yet possibly for all the wrong reasons. Typically, I wouldn't classify such a market as strong. And this brings us to the first risky point in the NSX market. Cars are selling slower and slower. Bear with me while I walk you through the numbers. The supply trend has been down since the beginning of 2022, and basic economics dictates that a decrease in supply should result in increasing prices. But this of course only holds if demand stays at the same level. Now, it's difficult to measure demand directly. What we can do though is look at the relationship between supply and demand by using the carried over inventory rate as a proxy. The carried over inventory rate shows the percentage of cars that aren't selling within 3 months. The higher the number, the slower the cars are selling, the weaker the market. Looking at the development for the NSX, we can see an increasing trend since mid-24. Meaning that an increasing share of the market is unsold after 3 months. In December 25, this was for example 50%, meaning that half of the cars that were listed for sale in December were also for sale in September. In December 24, this number was only 28%, and typically, an increasing trend points towards a weakening market. But that's not all. The selling speed of a car can be influenced by how much unsold inventory is discounted. In general, decreasing prices for unsold cars increases the selling speed. However, the price change for the unsold cars, as shown by the discount rate, became slightly more negative. We can see that it was -5% in December and -4% in September. These rates tend to have a strong seasonal component, but it's often difficult to see this for small markets like these. Yet, the two latest data points seem to indicate a more negative discount. So this means that cars are selling slower, despite being discounted more in case they don't sell. And usually, that's not a very good sign. All of this might be a consequence of the historic market situation. 1 year ago, we evaluated the inventory situation of the sports and supercar market and concluded that the NSX, at that moment, fell in the top left corner. A risky quadrant, as you could get a good deal while the market gained strength, but also could end up overpaying. The current data moves the NSX more towards the right quadrant, a quadrant that usually contains weaker markets. 1 year ago, we found the Nissan Z and MC20 for example over there. Now, I'm not saying that the NSX market is as weak as the MC20 market 1 year ago, just that the car moved more towards the right top. Now, the inventory data often tells a good story about what's happening in the market, but we need to remember that the NSX market is small. Therefore, we cannot solely rely on the inventory data. We just need to keep it in mind and remember that it points towards a weakening market. Let me know, by the way, if you want to see an update of the inventory video. It's a niche subject with relatively low views, but I believe that my core audience appreciates the breakdowns over there. So comment down below if you want to see an update in that video. Back to the NSX. So we saw now that the price trend stabilized, but that the inventory data weakened. Cars sold slower than before, and discount rates on unsold cars increased. But there's another important factor that we need to take into consideration. The NSX market might be less unique than we think. If we look at the US market trend for sports and supercars, we can see that the yearly depreciation rate has been decreasing since the pandemic price stop. In other words, the market strengthened significantly during the past few years. At the moment, the average yearly price change sits at plus 0.5%, and the confidence interval for the average ranges between minus 2.75 and plus 2.75. So this means that the NSX market might be simply following the US market trend. After all, the pattern of decreasing price changes in the market trend and the NSX market are very similar. But we all know that averages can be deceiving. So let's make this a bit more concrete by comparing the NSX to some competitors. Over here we have the price trend for the NSX and the 570S Coupe. See the similarities? A big drop after the pandemic price stop and a flattening during last year. The MC20 is a lot more expensive, but also a left field choice. See the price pattern? It's similar to the one in the NSX market. The same conclusion follows from a comparison to the second generation pre-facelift Audi R8 V10. The trends are all similar to each other. I, by the way, just did a full market analysis on the Audi R8, so click over here if you want to know more. Now, all of this means that the flattening price trend that we saw is driven by a systemic factor and isn't driven by a factor that's unique to the NSX or R8 or 570S market for that matter. Hence, it's likely that future prices will move in line with the market, similar to what they've done historically. Does the same apply to the inventory situation? Perhaps, but not to the same extent. Looking at the comparison for the carried over inventory, we can see that the trend has been up for the 570S. That's the same as for the NSX. The increase though is slightly less. The R8 value is at approximately the same rate as last year. Continuing with the price changes for unsold cars, we can see that the 570S and R8 have a stronger seasonal pattern. Typically this is because the markers are larger and it's easier to identify it in the data. Now compared to last year, the R8's rate is slightly less negative and the 570S's rate is slightly more negative. So is it time to act and get that NSX? We'll talk about that shortly. First, we need to discuss the other models and generations. They're outside the main scope of this video because supply is low, resulting in unreliable price trends. But let's have a quick look at the numbers. Starting with the Type S of the NC1 generation, we can see that prices were flat during last year. In addition to the supply level that is usually less than 10 cars, the problem in this market is also caused by the fact that the cars are almost all brand new, despite being from model year 2022. Hardly any of them get driven. Up until the end of last year, the median mileage was below 500 miles, and this makes it difficult to get a sense of the price development. The flat trend is therefore a bit misleading. Inventory data shows that these cars were selling extremely slowly during 2024, with peaks in the carried over inventory rate up to 80%. It improved slightly throughout 2025. Discount rates even flipped to the positive side, meaning that sellers increased prices on unsold cars. This shows that they have confidence in the market. I, though, have a little bit less confidence in these numbers. It doesn't mean that values will plummet, just that it's tricky to extract something meaningful from the data. Switching things up to the NA generation, we can see that I don't have 1 year's worth of data yet. Overall prices seem to be stable or going up, but supply hovers around 5 cars for each of these trends, so the uncertainty is high. Let's wrap up with the base model of the NC1 generation. Is it time to act and to finally get that NSX? That fully depends on your expectations. If you always wanted one, or simply want a supercar that's unlikely to plummet in value, I don't see any reason why you shouldn't get one right now. If you want a car that's guaranteed to be going up in value, it might not be the right choice. But that's also not what the channel is about. The price trend flattened, and right now is definitely a better moment to buy one than 2 years ago when prices were trending down. It of course doesn't mean that prices will go up in the future. As I always say on this channel, discussions about future prices are pure speculations, because I don't have a validated model that can predict future prices in a reliable way. So let's speculate. We saw that the flattening of the price trend is heavily driven by a systemic factor, and that the inventory situation is perhaps slightly weaker than for other cars. Therefore, it makes sense to assume that future NSX prices continue to move in line with the market, possibly with a slightly higher risk towards the downside. If competitors go down, it's likely that the NSX follows, and vice versa. Also, other statistics like the mileage sensitivity are very similar to the competitors, so the NSX doesn't stand out significantly. Prices for the Type S held up quite well, and the inventory situation improved slightly. But let me reiterate that those numbers need to be interpreted with care. The uncertainty is much higher than for the base model. Now, these deep dives into the more niche models like the NSX this week and the Emira last week usually don't do so well in terms of views, but every now and then I like to do something else than the quarterly Porsche and Ferrari market updates. So please let me know down below for which other models, doesn't necessarily need to be a niche model, you would like to see a full video. As always, thank you for watching, and I hope to see you again in 2 weeks for a fresh market update.